Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim. Thanks for inviting me on.
Rick, taking a look at the U.S. markets today, another big down drop. As we speak, the Dow down almost 300 points. Is this going to be a semi-permanent feature, a few days of minor rallies and then more big drops?
Well, I have to say, Jim, I'm as perma-bearish as anyone out there. You know, my friends say, hey, you've been saying the sky was going to fall since 1970. And it's true. It's not as though I just see the glass as half empty. I see it as half full, but with hemlock. So when we come down the way we have, especially from some fairly significant rally targets that we talked about some time ago, there's always that chance that, yes, a bear market has begun. And I'm saying that more or less matter-of-factly every day in my newsletter. And emphasizing the fact that any rallies are distributive. But on the other hand, because I'm just by nature so bearish on the stock market, I like to kind of run my play contrarian to myself. And so every day I'm kind of in there saying, hey, beware, they could rally this thing, they could get a short covering panic going out of nowhere. And again, every day I'm looking and I'm thinking there's no real buying power at all in this market. It's just, and you know, also I could probably give you 10 good reasons why we're in a bear market. And that again makes me more careful about saying that it's a done deal.
Well, you said you could give 10 reasons. What's a handful of them?
Well, some headlines from today's news. We've got home sales posted steep fall in December. Let's see, world braces for slower growth. Silicon Valley's unbridled optimism gets fresh reality check. Stock market's next hurdle, tech and industrial earnings. UBS warns downturn isn't over yet after clients pull $13 billion out of the market. Shutdown could hit already lousy U.S. home sales. It's like, how many headlines do you need? And I've been saying probably since last summer that when the housing and the auto sectors started tottering, that stocks were going to be in trouble, and yet they still squeezed another pretty strong quarter of earnings out of nowhere. And until Christmas, there was still the smoke and mirrors news story about how Christmas sales, holiday sales, were pretty good. I didn't feel it, and I was saying somehow I don't trust those statistics, and it turns out the retailers did not have a great holiday season, which is certainly a good piece of the U.S. economy. So everything looks so bad that I feel obliged each day to be at least a little careful about what I say.
Well, also, I was asking some people, are we in a recession and don't know it, because we're seeing GM with massive layoffs, Bombardier announcing it's cutting its workforce by 5,000. Other major dealers, like some securities firms, planning to lay off 15% of their personnel. And officially, we're not in recession, but the actions that we're seeing sure look like it.
Yeah, and the best way to gauge that, I mean, that's a pure contrarian gut play. As long as we keep reading that all the usual experts and talking heads say that the odds of a recession in 2019 are about, they've increased to 40%, well then you know we're already in a recession. So, and I think it was always, even though the economy seemed to be going great guns, the news media and the institutional investors were not eager to distinguish between financial assets and inflation going great guns and the actual economy creating a lot of jobs going great guns. So we've got a job shortage, but or a worker shortage, but it's only because of something that's not an economic plus. That is a mismatch between our labor force and the good jobs. We've got too many art history and sociology majors and lawyers in the colleges now, and not enough STEM people, science, technology, engineering, and math.
Yes, also, somebody pointed out they were in a mall one day, and somebody was making fun of the mechanics working on some kind of particular problem in that mall. And right now there's a shortage of tradespeople. Why would people run down good-paying jobs that are very necessary to our economy?
Yeah, and you know, those guys, those mechanics, just try to call a plumber. You'll be paying them $113 an hour just to fix a toilet that won't flush. We haven't really, that's a tectonic change in the economy that we haven't really felt. The fact that we produced way too many lawyers in the 70s, 80s, and 90s, and we've got a shortage of tradespeople. But I think the tradespeople are pretty much catching up. Everybody I went to high school with who was in the roofing business or plumbing and heating, they all retired 10 years ago. So it's you know, we're going to see the long-term effects of that over the next decade or two.
We'll have more with Rick Ackerman right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Rick Ackerman. Rick, in Canada, the Royal Bank of Canada, the biggest, has been followed now by the Bank of Montreal and the TD in cutting their 5-year mortgage rates. Does that prove that you don't need to have the central banks cut rates to try to improve business in the mortgage field?
Well, it's a question of lower rates. Housing prices still haven't caught up with these lower mortgages. And if you're a first-time buyer and you think, oh, great, you know, I can get a mortgage for 4% plus whatever, and but it doesn't look so good if you don't think that your home is going to increase in value by X percent per year. So we had that for so many years, and one thing that I've written many times, I've written about as a deflationist, a hardcore deflationist, is that even a 3% mortgage winds up being very, very pricey in a deflationary environment. So in the great real estate and financial crash of 2007, 2008, no matter how low your mortgage, it wasn't low enough if your home was losing 10% per value per year, which it did. You know, the average home lost, I think it was 33% value in the U.S. over that period. And even though we've recovered, and more than recovered in some areas, dangerously recovered, I always still feel like there's the other shoe to drop, which will eventually give us, from the top, a close to 70% decrease in real estate values. And I think it's going to go a little bit harder on vacation homes, and ski properties. So anyway, we haven't yet had the collapse in home prices. They're just softening even in places like the Bay Area. and lower mortgages aren't going to do much to help.
When did people stop looking at a home as a place to live and instead as an investment?
Well, the great inflation of the 70s was terrific. You could not have been in real estate over the last 30 or 40 years and not made out like a bandit. So that habit, I guess, began during the inflationary years. But of course, real estate, because it's tax incentivized and tax leveraged, it stayed very strong. So I don't know. The millennials seem to have gotten a message that it's possible to buy a house and not make out like a bandit, and that's why the first-time buyers market has collapsed. But with the other, it's going to take a while before people who are sitting on homes thinking, well, I'm not going to sell now, realize that they maybe should have gotten out at a peak that may have occurred last year.
And also maybe people are realizing, maybe I should have bought the home whose style I really liked instead of the one the real estate agent told me would go up the most in value.
Yeah, that helps. It's almost like buying art. If you don't like the way it looks on your wall, you better not buy it as an investment. I know that because I'm stuck with a painting called Arena 5x6 oil painting, and if there's anybody out there in your audience that would like to see it, I've got a painting I'd love to sell them. But anyway, yeah, it's when you talk about buying the house that you can live in, that's a huge demographic overhang because we've got essentially the baby boomers retiring, and many of the ones that I know are downsizing. But the question is, who do you sell your upsized home to? And it's certainly not the Gen Xers or the millennials. So I think that we're looking at a real collapse in the price range, let's say maybe from $500,000 to $2 million. There are no buyers there, or at least there won't be buyers to take the homes, these larger homes, off the hands of the baby boomers who live in them.
Well, they also made the news here in Vancouver that a detached home has fallen below $1 million in price, but it's a fixer-upper, and you'd probably have to sink a lot of money in it, so it still would be, still cost you over $1 million.
Well, that'd be something if Vancouver has finally turned the corner. You had quite a frenzy there. And even relative to the places I've lived, Boulder, Colorado, for one, $1.5 million there is better than a fixer-upper, but it's still pretty pricey. But we've got a lot of markets that will need to make that adjustment, and Vancouver was really long overdue.
We'll have more with Rick Ackerman right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, oil is trading around $52 right now. Or is it going to go lower or higher or stick in around that number?
I can't see higher. China, demand from China really sets the price at the margin, and the economic stories coming out of China are not really encouraging on the point of some sort of manufacturing revival. So I'm definitely an oil bear, although the recent rally we've had is certainly pretty powerful. From a low down around $42. This is basis NYMEX crude, and as of today, we hit actually a recovery high up at $54. So that's plenty. That's pretty normal as a dead cat bounce in the context of a correction, or not a correction, but a sell-off from the recent peak there, up around $76 a barrel. So we did come down to that low at 42. I think we're going to take another leg down.
Natural gas also down, and you wouldn't expect that when they're having record cold back east.
Well, but when you read about how in Texas the natural gas that they're producing in the process of oil drilling is being not even burned off at the wellhead, they're actually paying distributors to take some of the excess gas away and put it into the market. And natural gas, the supply is somewhat fungible. If just free natural gas in the U.S. will eventually have its effect on prices of natural gas in Canada.
Well, I guess it is better to give it away than to flare it off.
Yeah, and but in some cases there were such huge excesses. There must be laws concerning burning, but the distributors were charging the producers just to haul the gas away in the transport vehicles.
Is gold stuck around 290 or around 1290?
Well, every time I get interested in gold, it disappoints, and all I can say is that it really doesn't act like it's in a bull market. It's in a good, sustainable, where the bears have a lot of trouble pushing it down, and I was never really concerned that gold would dip below $1,000 an ounce, but it just doesn't seem to get altitude. We get enough of a rally that from a technical standpoint, I start saying kind things about gold, and then it just kind of disappoints. So it looks to me like it's in a very long-term accumulation.
Uranium, is much attention being paid to that right now? Because some people are pointing out that new atomic plants are coming online, and Japan is still restarting the ones that were shut down by the tsunami.
Well, let's just say there's a bullish support in the story that any country that truly is serious about going green has to consider a nuclear option. And when you get enough electric cars out there on the highways, it's going to dawn on them that the electric power that runs those cars has to be produced somehow. And whether you bring fossil fuels or you get it from nuclear sources, well, nuclear is obviously the environmental winner. If you, I don't say you should be dismissive of the problems of waste disposal, and I'm not so much concerned about Chernobyl type and the Japan nuclear accidents as I am about the accumulation of nuclear waste. But I think that story has legs. It's really you read well, from last week there was a story about China saying it's not going to subsidize solar, and but China is definitely struggling to get air quality back on track. So I think that it points China in the direction of more nuclear power. So I think it's not a bad story, and it's reflected in the fact that one key uranium play, Cameco, has come in October. We had a low down around $7 and change, and more recently in November traded as high as around almost $13. So it's got a nice trajectory, and I think that reflects just a buoyant story in the nuclear power sector.
The White House keeps making pleasant noises about the progress of trade talks with China. If the Chinese economy is taking a downturn, would it make much difference?
It will, although I think it'll be too little too late. We're talking about, I guess, tariffs on the order of $250 billion going either way. And that's not a lot relative to the GDP of the U.S. or the GDP of China. And it was more, I think that the value of some sort of trade deal with China was more psychological. And the positive story, mainly through Trump and his tweets, has been recycled so many times that we're getting a little bit tired of the story. So I don't think when we get some sort of deal with China, I don't think it will be comprehensive enough for everybody to say, hey, the trade problems are over, China's going to play fair, they're not going to steal our tech secrets and this and that, and they're going to respect property law, intellectual property. I think you can't add enough of those up to make much of a difference in the markets at this point. In fact, I'd be inclined to sell the news.
Rick, anything else that we should be looking at right now?
Well, I think it's just realistic. If you're a market watcher every day, as I am, if you put it in the perspective of every rally being distributive, it'll make things a lot clearer. You'll be able to understand price action in the markets. Just remember that there's only one source of buying in this market now, and that's short covering. No other source of buying is really significant, and it's hard to know what we're going to see in the corporate share buybacks that were providing such buoyancy to the markets for so long, because a lot of companies that bought their own shares, Apple certainly comes to mind, they took a bath. And it's so you have to be suspicious of all the rallies, and in terms of reading them, the question is, well, what kind of news would induce shorts to cover, induce a little bear panic? So from day to day, the market has become more comprehensible to me in that perspective. So that's it. I really do think we're in a bear market. I talked with a buddy of mine yesterday who has he's made most of his money in real estate, but he's selling off properties now, and he said he was going to put it in the market. So we got into the usual argument about I've been bearish for too long, and he's done pretty well in the market. And he said, yeah, I just think this is a correction, and I've done well just standing pat over the years, and you bears don't really have things sorted out. You don't even know what a bear market is. And at least there I was able to say I do know, and I'll say this, that a bear market is not Dow 22,000. It's more like Dow 15,000. So he said, no way it's going to get down there, but I think there's a way.
Rick, thank you so much for chatting with us.
Well, thank you again for having me on, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Rick or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.